G'day traders, it's John Howell here, and over the last 15 years of my trading career, there's so many powerful things that I've learned from trading the markets. And one of those things is understanding how the markets work. Okay, the markets go for a run, then they go for a pullback. They go for a run, they go for a pullback, right? Some people go for it. Some people say, it's you're trading with a market runs with the trend and then has a counter trend, or the market might go through a bit of a resting phase. Is what's called like a time phase, right? Like a price and time phase, which simply means the price is when the market's making a move in a direction, and when the market goes quiet, a very, very sideways phase for quite some time, then when the breakout happens, it's likely to actually start to have a pretty long move. Now, what I'm talking about here is that with the actual gold chart, this is the gold chart we're looking at right now. And I'll just bring up the candlesticks here just for a minute. I'm just looking at the gold chart right now, and I'm going to share with you this actually video that I did for my private clients. And I'm going to share with you, I'm going to play this video right now. And this video here is going to share with you how that when this market started to break out through here, especially down through here, when this gold chart started to break out, how you could tell that after this period through here, this sideways phase, how we're getting ready for at least a month's worth of downward movement out of this. Now, I didn't know it was going to go down. In the video, I'm about to play for you that I did for my private clients, you'll be able to see, right, that I said, okay, if it breaks up or if it breaks down, we don't know where it's going to break, but wherever it breaks, it's likely to trend there for at least a month. So anyway, guys, let's get straight into it. Hey, you, don't place a trade based on what you're seeing in this video, because trading is difficult, right? There's so many areas you need to know to become a good trader. Trading systems, mindset, the foundations, chart reading. There's so many areas you need to know to become a really, really good trader. So this video here is to become educational only, and there is no guarantees of making any money on any single given one trade. So be smart about the way that you're trading and protect yourself. Also, grab a 100% free, brand new 12-hour trading course, foundations, chart reading, trading systems, and so much more, mindset. Link in the description. Go click it right now. I'm giving away 100% free access. Link in the description right now. All right, fantastic, guys, fantastic. Let's get straight into it. Now, I want to bring up the actual gold chart itself. Let me bring up the gold chart itself. All right, and I want to share with you, this is a great example of what's happening with the gold market right now, okay? So, one thing that's really important is that it's important to understand that the market goes through different types of what we call phases. All right, and for people understanding the Gann stuff, there's a time phase and then there's a price phase. The time phase is obviously where the market's resting, and that can be very, very, very volatile. Now, the price phase is where the market's trending and the smooth action can start. Now, if you look at gold right now, and the reason I'm bringing this up because I want to share with this with gold is that a lot of people, when they trade, they try to trade in the time phase. So let me explain what I mean here. If I go back and bring up my chart through here, you can see what we're looking at right now on gold. Okay, now what are we looking at on gold? Let me just delete that off there. Let me delete that off there for a minute. And firstly, you can see that we have probably a strong area of resistance up through here. All right, so that's the whole area of resistance. Then what do we have? Now we also have this market, this level through here, right? This is a support level. Now, the thing that you see with this market, okay, the market goes through different phases. So what's happened through here, right? This market ran up. The market ran up here for a month and a half, right? So that was what we call the price phase, where the market actually had from there to there, basically. And let me see if I can just change that color there for a minute. Let me change that to say a blue. All right, cool. So that there was the price phase, and now what we have through here is what we call the time phase. And the time phase is where the car is the car analogy. The jet, the boat, the body is refueling. Okay, it's refueling. It's like sleep here. So one thing that's really important to understand is that whenever you're trading, ask yourself, what phase are we in when trading the markets? Are we in a price phase where the market is trending? Or are we in a time phase? If we're in a time phase, time phases can be very, very, very volatile and can whip you out. Now, as you can see through here, right, we actually have two different types of phases that's happening right now. We have this price phase through here, and through here we have this time phase. Now, time phase, once again, is where the market's just going sideways or it's a pullback phase. All right, so this here would be a price phase. This here would be a time phase, and then another price phase. And then it went into another price phase, and that two different price phases is basically a change in direction, basically. Now, when you're trading this, it's so important not to get involved. If you're trying to trade the daily chart and you're trying to get in and get out, get in and get out, get in and get out, all that sort of stuff on the daily chart, that is, and you're saying, or even if you trade on an hourly chart, doesn't matter what market you're trading. If you are trading the markets and you are seeing that the market is going through a what we call time phase, that should be T for time phase, then you want to try and stay away from that. The reason why is because it's refueling. It's not likely to trend. Now, here's the thing. Let me take everything off the screen here for a minute. Let me delete everything off the screen here. We can see here that the market ran up from there to there was 1.5 months. So now what have we done? We've now done almost 3 months. So we've done so much time now. Now, price and time are supposed to be equal. So we did 1.5 months of upward movement, 39 bars to be exact. And now we did basically 3 months, 78 bars so far of sideways movement. Now, what does that mean? What does that mean in a nutshell? Well, because price and time are supposed to be equal, here's what happens. When the market does too much price in a short period of time, i.e., the market goes for a big run like this, then time needs to catch up. Time catches up. Now, in that time phase, if there's too much time, then price needs to catch up. And what does that mean? That means whenever it breaks, if it breaks to the downside and we get some volume behind that break, a big strong break, or we get a break to the upside out of this time phase, then it's likely to be a big solid move for at least a month, I would say. Now, depending on the size of the bar and the size of the breakout and so on and so forth. But because we've now had almost 3 months already of this time sideways phase, now to me, it's depending on where it breaks out. Now, we could get a sharp breakdown, by the way. If we get a sharp breakdown out of this sort of sideways phase through here, then guess what? We are now likely to probably head back down towards the low through here. If we don't and we do hold through here, then guess what? We now actually have from there to there, we now have the market holding this 50% level. If it does break to the high side in a very big, strong fashion, that's a very bullish signal because we retraced less than 50%. We're now going through this time phase, and this time phase is resting. That tells us that price needs to catch up soon. And if we go through this for another month and then we break out, guess what? Price needs to catch up in the market. And when that does, you generally get an explosion in the price. Have you ever seen charts? Let me show you an example here. All right, so here's one example of a trade that I did recently, a while ago now, and I wanted to share this with you, and I want to share with you what the actual chart looks like. In fact, let me just bring up the actual blank chart here so you can see what I'm looking at here, all right? So I'm going to bring up, just say 1 year worth of view, and I'm going to bring this back a little bit so you can see what I mean here, and bring this up a little bit through here. Now, one thing you can see, right? Let me show you this here. Look at this here. See how long we basically went sideways. We didn't trend at all, right? See that very long sideways phase. That whole length there, from there to there, before it started to break out. That was a whole 7 months, right? That was a whole 7 months of sideways. We had a little rally up, a little drop down, and as you can see, right, we actually spent almost a month and a half going here, and then bam, look at that big breakout bar, and that was the start to see the upward move that we've actually seen so far. All right, and now we've actually had, from basically where this move started, from there to there, we've had now, what is that? That's now 2.5 months of good, solid upward movement. Let me show you another example. All right, so here's another example of what we call price and time. When the market does too much time, price needs to catch up. So let's look at this through here, and I'll just squeeze this up a little bit more so you can actually see what I'm looking through. Look at this sideways phase, all right? So you can see we actually had, look at this sideways phase from there, and basically all through here as well too, right? So basically just sideways, 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 sideways. How long was that sideways movement for? The sideways movement was for what? It was for almost 4 months in time. 3.5 or 80 bars, basically, almost 4 months worth of time. What does that mean? That means now this market has gone sideways for a long time. And if we get a strong breakout bar, like we can see that we did through here, right? We get a strong breakout bar from that, especially if we can confirm it with volume, confirm it with some moving average trend analysis. That tells us that now we're ready to start a new phase. What is that new phase? Once again, guys, what is that new phase? This is a time phase, and because we're getting a strong breakout, we're now starting a price phase. That tells me we should get a price phase. If this went sideways for at least, what was that? A month? Well, no, 4 months, wasn't it? Yeah, 4 months. You would expect at least a month to 2 months of upward movement. Now, I forget exactly how long that actually went up for, but how long did that actually go up there? From there to there? There you go, went up for about a month. But you can see, right, the reason why I say depending is because if we get a really big movement out of the gates of price and time, as you can see, the market did so much time that we had a big up move. Now, if we slowly go up, guess what? That's now probably going to be at least half of this time phase. If we get a bullet out of gate, you can see it can just be a quarter of that time phase. You can see how this thing went from here to like literally 4 days later, go up 72% because bam, 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 big update, big update, big update. Let me show you another example. All right, so here's another example. As you can see, right, it wasn't a sideways phase, but what was it? It was basically what we go through a time phase, right? Look at this here, just sideways. Look at this here, from there to there was literally 11 months. So you went through 11 months, basically 11 months of sideways, slow pullback. Look at this here. Look at that very first breakout bar. Look at that there, right? Very first strong breakout bar. And that breakout bar was what? That breakout bar was after we had this sort of slow, sort of sideways phase. You can see it basically through there, right? Just a slow, it's just what we call price and time phase, right? If we go from there to there, you actually can see, right, that the market held the 50% level and took off. Now, what I'm trying to share with you guys is that this price and time, instead of going sideways, this slowly went down and bam, strong breakout bar. See that big strong breakout bar? That there, and confirmed with volume. In fact, if I go back to this chart here, you can see what happened now. But if I go back to this chart here, right, look at the volume there. Look at that volume. See how that volume is confirming now, this breakout? And we went all this here, and you can see with the moving average as well too. Then suddenly look what happened. This thing just absolutely just took off like a bucket of gates, right? And from there, and you can see, and that's what I said before, right? As you can see on this chart now, you can see how this market went sideways for so long that the more time a chart does, the bigger the explosion in the actual market itself. And so you can see here what I'm showing you the example here. It went from there to there. We see 35% in the actual price movement. It actually eventually went up to there in about 2 months. But as you can see, right, within a few days, this thing absolutely just took off like a rocket. Absolutely took off like a rocket. Let me show you another example. All right, so I want to finish this off with a bearish example of the price and time thing, right? So you can see here once again, see how the market just literally has just been going sideways through here. This is actually a trade that I did. You can see the market's gone sideways through there, and we really had this sideways phase through here, right? See, the market wasn't really going anywhere. Try to break up, try to break down. Really nothing much going on, is there? Really not much going on. Sideways movement. And you can see from there, from this point through here to this point through here was basically sideways. What was that? That was a 6 month sideways. Look at the strong breakout on this thing, right? This thing just absolutely just, look how strong that breakout was. Just bam, look at the strong breakout. Now, you don't know where the breakout is, and you can see the market actually took on down. This is a trade that I did. But as you can see, right, here's another example of when the market goes sideways. Now, it's not exact there, but when the market goes sideways quite some time, when there's too much time on the chart, price needs to catch up, and therefore you get an explosion in price. Now, again, you don't know where the breakout is going to be, but generally speaking, guys, as you can see, right, if the market goes sideways quite some time, like I shared with gold chart, if we get a strong breakout to the upside, then we can get ready for a really strong movement to the upside. Please watch this video 2 or 3 times if you don't get this so far. This is a very, 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 very powerful tool to help you with your trading. So there we go. I hope you can see the power in understanding what we call the price and time. And this is just really understanding how the markets work, right? The market goes for a bit of a run, then it pulls back. It goes for a bit of a run, it goes pull back. You can use any phase you want. Essentially, what that is all about, what that's all about is that when the market goes quiet for a long time, when it breaks out, it's getting ready for some sort of a long, a long move or a big move. There's another stock here, AGYS, was one stock that I actually personally traded. And why did I trade this? Because look at this. See this sideways phase through here? See all this real long sideways phase through here? Long sideways. The market went sideways for a while, and then we started to get the breakout. Guess what? Because we actually had all this time going sideways, the market was getting ready for a nice move up. So you can see that, right? So I hope you can see today's video was about just to share with you, hopefully, that when you start to see these markets, and we're obviously trading with what the market's telling you, that whenever the market starts to go through a long sideways phase like that, wherever it breaks out, depending on the length of the move, I would say that, like, for example, this one here was probably around 6 months or so. This sideways phase was actually around 3 to 4 months. So I would say around 1 month. And as you can see here, it's actually been more than 1 month, but from here to here especially, I would say 1 to 2 months. I'd say around about 1 month worth of movement in that direction is likely to happen. Now, it depends on the speed of that move, right? So if you suddenly start to get wham, really, really quickly, well, it's probably only going to last maybe a week of really big movement. Or if it slowly goes down like gold did, you can probably get like a month or so out of that direction. Now, what happens after that? We don't know, and this is not guaranteed. All I'm saying is that when the market goes sideways for quite some time, when it breaks out, majority of the time, a high percentage of the time, when it does break out, that it's getting ready for some sort of a move in that direction for quite some time. Now, I'm not saying just get into the market just based on what I'm saying here. You still need a setup, right? You still need to, just because it breaks out doesn't mean, I have to be careful when I do these videos, right? Because some people are like, oh, John, there's a sideways phase, and then when it breaks out, you said to go long. Remember, it's not about one trade as well too. There's a whole bunch of other areas you need to become good at, as I said in the disclaimer. And I say that disclaimer for a reason. Some people don't realize that. There's so many areas. It's not just about the trading system, right? So anyway, guys, I hope you enjoyed this video, and I'll see you in the next one.